Hi, I'm Reza and we're back with another episode of To Invest or Not. Remember, this show is not a recommendation to buy or sell securities, only suggestions for further research. Let's get straight to it. Now here's one commodity or resource we have to talk about: uranium. It surged to its highest level since 2014 at about $50 per pound, but we also have to talk about a Vancouver-based uranium exploration company that saw its stock price jump more than 400% since last year. They go by the name Skyharbour Resources Ltd, and they're a uranium and thorium exploration company that deal with the acquisition, exploration and evaluation of mineral properties in Saskatchewan, Canada. The flagship project is the Moore Lake Uranium Project, covering 35,705 hectares, located on the eastern portion of the Athabasca Basin. And it's a pretty good gig because the basin is known for hosting one of the world's richest uranium deposits and mines, producing approximately 20% of the world's primary uranium supply. However, they also have other projects in the area such as Preston, Falcon Point and Man Lake. But let's get back to the reason why we are talking about Skyharbour. If we take a look at how they performed in the TSX Venture Exchange in the past year, it's a pretty sight to look at for its investors who entered at around 15 cents per share back in November of last year. Fast forward 1 year later and we have SYH reach 84 cents per share this September. A 460% ROI is pretty impressive. Now, since its correction though, it has managed to climb back up and hover around the 75 to 80 cents per share price range. So will it continue a bullish trend, or is it done with all that? Well, it's important to consider uranium's future landscape. We know that uranium is used to power commercial nuclear reactors that produce electricity and to produce isotopes used for medical, industrial and also defense stuff. So as the demand for electricity grows year by year, to be a bit more specific, approximately 50% by 2040 if we include electric vehicles, you should expect the uranium sector to grow with it. Since nuclear power provides less CO2 emissions and low-cost energy, it's ideal for dealing with climate change. That would explain why uranium's demand is expected to grow at 3.1% compound annual growth rate from now until 2040. I mean, China, India and Russia are making big nuclear investments, with all three countries currently planning to build many new reactors for a number of years to come. The current demand is approximately 196 million pounds, with mine supply at approximately 138 million pounds. We are expected to see a supply gap of 100 million pounds of uranium by 2030. So the simple supply and demand concept can give you an idea of what we could expect from uranium exploration companies in the future. So with all that said, I ask you this: to invest or not? There you have it, guys and gals, millennials and madmen. Remember, these are suggestions and ideas, not financial advice, so always do your own research and don't forget to subscribe and hit that like button and let me know what you think in the comments section below. See you next time.